Bank of England's man says inflation persistence has been my key view. Bank of England's man says, as I look forward, we can see budget changes will lead to lower inflation rate. Bank of England's man says, but we've had behavioural changes linked to 4 years of inflation above 2%. Bank of England's man says UK firms are reluctant to reduce prices even when demand is weak. And man says trade-off management has been increasingly hard. Bank of England's man says behaviour changes resulting from above target CPI. Man says overall labour market situation is not as dire as Bank of England surveys show due to public sector employment. Man says the cost of inflation and policies generating stickiness in wage developments have started to grind down employment. Bank of England's man says the labour market not as dire as reports imply. Bank of England's man says divergence between public and private sector jobs. Hassett says must recognise this is a transformative time like the 1990s. It's currently Hassett speaking at a Wall Street Journal CEO Council Summit. Bank of England's Dingra says I remain very concerned about food prices, but overall disinflation on track. Hassett, responding to a question on how the Fed should take rates, says assume neutral rate of 3.25% to 3.5% is about right. Excuse me, that was Bank of England's man saying assumed neutral rate of 3.25% to 3.5% is about right. Bank of England's Dingra says disinflation has been on track this year. Bank of England's man says incoming data are pointing to rising goods price inflation, opposite to what is needed for a target consistent headline CPI. Dingra says higher UK inflation than Eurozone is not due to persistence but one-off administrative prices. 1 minute remaining for the market on open imbalance. Bank of England's Ramsden says UK stoked 2025 inflation with higher tax and minimum wage. Hassett says AI is bigger than computer for productivity. Ten seconds. Market on open imbalance. S&P 500 buy side 36 million, Nasdaq 100 sell side 8.4 million, Dow 30 buy side 31 million, Mag 7 sell side 3.3 million. Bank of England's Dingra says inflation more to do with shocks, not persistence. Bank of England's Dingra says backdrop of weak consumption and labour slowdown. The S&P 500 opens little changed, the Nasdaq 100 down 0.2%. Bank of England's Dingra says don't see the need for policy to be so restrictive. Hassett says I put Scott Bessent top of the list for running the Fed. And Hassett saying, but Bessent doesn't want the Fed job. Bank of England's Dingra says unlikely expectations will fuel inflation. Hassett says there's plenty of room for the Fed to cut. Bank of England's Governor Lombardelli says I worry more about upside risks to inflation. Lombardelli says I put weight on structural factors pushing up inflation. Lombardelli says all MPC members are balancing risks to CPI. And Lombardelli says I'm less convinced than others about how restrictive policy is. Bank of England's Lombardelli says I'm worried about capacity constraints. Hassett says most important for the Fed chair to look at data. Nvidia shares down 0.8% after FT reports China to limit access to H200 chips despite Trump's export approval. Bank of England's Lombardelli says I might slow down rate cutting pace as we get nearer to the end point of the cycle. EU's Costa says very close to obtain solution on frozen asset loan plan. Hassett says if Trump pressures Fed on rates, just do the right thing. Hassett says I would make decisions on rates based on my judgment. So Hassett further saying rate calls would be my judgment, which Trump trusts. Hassett repeats that a lot of Fed behavior has looked political. Bank of England's Ramsden says neutral rate close to middle of 2 to 4% range. Hassett says I was right to question those saying no need to cut. Hassett says looking at productivity growth now at say 3%. Hassett says labour growth little smaller than it has been. Hassett says underlying GDP growth way north of 3%, maybe 4% plus. According to sources, Russia's Syrian oil refinery halted processing after a drone attack on December 5th. Hassett says shutdowns had a lot of effects on the data. Hassett says got sentiment collapsing in normal way of shutdowns. ExxonMobil shares up 2.4% after the company raises 2030 earnings growth and oil production forecasts.
Voice news disconnected.
Just give me one quick second there, guys. I'll be right up.
Hassett says Trump will lay out the facts on the economy. Bank of England's Lombardelli says we think budget will reduce inflation by 0.4 to 0.5 percentage points. Bank of England's Lombardelli says the Bank of England budget analysis similar to the OBR's. Bank of England's Lombardelli says downward impact on inflation will be a one-off for a year starting in Q2 2026.
To go. Maybe house cleaner, maybe?
At 10 a.m. Eastern Time, we're expecting the US JOLTS job openings, forecast 7.117 million, prior 7.227 million, with a range of 7.55 million to 6.9 million. Bank of England's Lombardelli says budget cuts inflation by 0.4 to 0.5% in 2026. Hassett says, I don't anticipate mass job losses from AI.
That's bullshit.
Hassett says AI will turn out to be a good thing, like computers. Bank of England's Lombardelli says looser fiscal policy will push up on GDP.
So Wednesday we got 30-year mortgage, JOLTS at 11. ADP was at 9:15. That ADP employment change.
Bank of England's man says pre-budget policy Bank of England's man says pre-budget policy prevarication has been detrimental to consumer confidence and business investment.
See what happens here at 10. ADP is looking pretty good this morning. Last night we were having a discussion inside the Discord about
Hassett says US-China imports at pre-WTO levels in a striking move.
About cuts on Wednesday for the Fed meeting. And I was discussing an argument that we might actually be better off with a market reaction if we do not get a cut. ADP payrolls this morning showing increases in payrolls. U.S. private employers added an average of 4,750 jobs per week in the 4 weeks ending November 2025, following 3 consecutive periods of declines, according to ADP research. The data suggests that job losses eased in mid-November.
Says past experiences from OECD shows that it is very difficult to consolidate fiscal policy later in the horizon.
Well, some of this might be associated
Bank
with
of England's Lombardelli says budget boost to GDP peaks at 0.2% in 2027.
Seasonal workers, too. The official November payroll report showed a decline of 32,000 jobs, making the largest monthly drop since March 2023, driven primarily by
Bank of England's man says households and businesses may make judgments based on likelihood of fiscal consolidation. Hassett says might get $400 billion in tariff revenue this year.
I want to see if we can get this pop up here.
In 5 minutes' time, we're expecting the US JOLTS job openings, forecast 7.117 million, prior 7.227 million, with a range of 7.55 million to 6.9 million. Hassett says more fiscal room to do stimulative things now.
It's almost like
Reminder in
Hassett
5
already
minutes'
seen
time,
the
we have the
numbers,
US
right?
leading index change month over month, prior minus 0.5%. Hassett says there will be a reconciliation bill next year. Hassett says lots of stuff people have for bill, like on housing.
About there. So this is Hassett this morning saying, if Trump pressures the Fed on rates, just do the right thing. I would make a decision on rates based on my judgment. Rate calls would be my judgment, which Trump trusts. A lot of Fed behavior has looked political. Shit. Labor growth is a little smaller than it has been. GDP growth is way north of 3%, maybe 4% plus. Shutdowns have lots of effect on the data. We got sentiment collapsing in the normal way of shutdowns. I don't anticipate major mass job. God, this guy's just fucking bullshitting right now, huh? Looser fiscal policy will push up on GDP. GDP definitely took a fucking hit, bro.
One minute remaining. Google Cloud says CDAC selected Google Cloud Gemini for government
I mean,
to
some of the
serve as
stuff that I'm
first
reading from
enterprise
Hassett this
AI
morning, I'm like,
deployed on US Department of
this
War's
is all bullet points from Trump, right?
Gen AI.
I mean, this is political. I mean, there's blatant politics at the Fed now, right? It's blatant. let's not forget that Powell was nominated by Trump, right? Yeah, it's like it's like these little sound bites are just meant to be sound bites. They're not really meant to be truthful.
10 seconds. $7.60 million, $7.60 million, higher than forecast of $7.117 million. US leading index minus 0.3%, minus 0.3%. So just to reiterate, the US JOLT job openings 7.67 million, 7.67 million, higher than the forecast of 7.117 million. Seeing some upside movement towards in the dollar index. US Treasury yields pair decline after JOLTS data. Yield on 10-year Treasury notes last flat at 4.174%.
This is a 30-year yield right here. Here is the 10-year yield. We're back to watching
The dollar
the
yen
dollar
rises
again.
0.5%.
Dollar cranking right now.
Hassett has now concluded his comments at the Wall Street Journal event. We have posted the US JOLTS October 2025 report on the feed for those interested. Spot gold slightly pairs gains after US jobs data, last up 0.3%.
SPY closing the gap.
US JOLTS job openings for September 7.658 million, 7.658 million. The S&P 500 extends gains slightly after economic data. The US dollar extends gains versus the yen and the euro after JOLTS report.
I don't know if it's quite flush. Last night we were having a conversation about do we need a cut or do we not need a cut? So let me read some of this stuff here in the background, this JOLTS data.
Bank of England Stingray says overall impact of the budget is not large, but in the right direction.
So we just completed 5 waves
The
up
US dollar
here.
last up 0.5% versus the yen. The euro
We
last down
should get some kind of a
0.1%.
technical correction in here. Sideways are down sharp. TXY is ripping. TNX ripping. DIX ripping. HYG rolling down pretty hard. Watch out for a pretty big drop coming up here in a few moments. It's not guaranteed. There's a little bit of man, I wonder if we get a cut. I mean, Hassett's basically sounding like the president's mouthpiece here, which is dangerous. You know, it's not good. The 10-year can push the market higher. I don't know exactly how to explain this, but let me try to figure this out in my brain here. So there's like the 10-year has been moving in concert with the stock market higher. Yeah, inverted. So if it's going, I mean, it's going up right now, but you can see this here. The bond market does not want a goddamn rate cut. I can tell you that for sure. Guaranteed. This JOLTS data does not help the argument for a rate cut on Wednesday. And we have I have this feeling that the market would react well to no cut. If we get the cuts, I would think that we would get the bloodbath. Now that's the hawkish cut that everybody's talking about, of course. Go back and look at 2024 really quick. Is it the 18th of December? So this is I want you to see this right here. So we went from, just want you to see this if you can with me really quick. It's a grind higher before the rate decision. So this was the grind higher before the rate decision in 2024. This was a hawkish cut. And leading up into that rate decision, so I'm reading something here saying there's a bull flag. I'm reading some commentary here saying, oh, there's a bull flag here to go up. This is the same kind of behavior. We switched from grinding higher, though, higher like this, to now grinding lower, right? Kind of see it right there. And right here, right? And then we cratered. But look at this squeezing right here. It doesn't have to exactly rhyme, but like
According
even
to
if we're
sources,
grinding up
Germany to
here,
tweak
or even
local
this is kind of
Rosneft
up still right here.
to avert U.S. sanctions.
But it's only for liquidity. You know, it's like a liquidity grab to send this fucker to the depths of hell. And this was a hawkish cut in here. We drilled 3%. Snout to tail, it was
So a bit more info to this Germany tweaking the local Rosneft trusteeship to avert U.S. sanctions.
So
Germany plans to tweak the
this
system that
perspective
controls
here,
the local
right?
assets of Rosneft
I'm gonna get rid of
PJSC
this
to ensure
one.
it's
You're definitely
complying with the
you're
tougher
definitely
U.S.
getting this right
sanctions
here. You're
imposed on
definitely
the Russian oil
getting
company last month.
the
The government forwarded a draft law to both
1, 2, 3
chambers of parliament
corrective move right
as
here.
a
But what I
matter of
want to
particular urgency. The
turn,
Chancellor
Voice news
turn
disconnected.
that shit off for a minute. What I want to show you is this roll here. And we're now doing this like same reverse grind, right? Get the grind up. All of a sudden, we did what we needed to do. Now come back down here. Even if there's squeezing up here, it's in service of a downside move. There's the bull flag. And there's the crater over here. I'll be honest with you guys. I would love to see no cut. I know it's the effective Fed funds rate is, or not the effective, but the Fed's future fund rate is pricing in that cut no matter what. I would think we'd get a better reaction if we didn't fucking cut tomorrow. You know, I'll be honest with you. This is all looking for liquidity to sell. Wham, to sell. This is not the up move that's over here. The Pavlovian dog response of, you know, buy it, sell it, 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 buy it, sell it was up. It's not up, it's down. Even on a squeeze up here. So even if we have the small inside corrective move here, and then we're back up here, it's only in service to sell this down. TNX looks bullish. Dixie obscenely bullish. HYG bearish as all hell. TYX bullish. TYX being the 30-year yield. And not only that, we have some data this morning that goes against a cut. ADP and Jolt. Inverted 10 years followed the stock market for let's see if I can see, I can invert this really quick. Why is that not showing there? Blank, 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 blank. Rid of that effective funds rate in there. Rid of that 30-year. So this is the inverted yield curve right here. I think it is. Comes from minus 2-year. Well, this is minus the 2-year. Get this right here. I don't know if you can see this in this chart here. You can kind of see it right here. Kind of see it right here. This yield curve like cranking up here. That should eventually roll this right down. Hard to put on this chart on this on the screen here. It's tough here. We've got Hassett out here arguing for rate cuts. I mean, I understand the idea behind this. I get the idea. I understand the logic behind this, but it's very dangerous. It's extremely fucking dangerous. Like Moran wrote a manifesto last year before, and there's real danger. There's like absolute fucking danger here. Absolute, not kidding, danger to our economy, business cycles, stock market. That's why there's Fed independence, you know, and there's like unknown unknowns with this new man, I don't know what I want to say in public about this stuff because I don't want to make it political at all. It's hard to discuss because I don't want to piss people off. You're basically saying, or like, so the presidency is attempting to, and still attempting this. They've been doing this now since last year, which is, or late last year, which is, asserting authority over an independent body within our government. And how you assert authority over that, you have to make the assertion, right? Mm. And I get the idea of using the short end to placate the market, to placate. Man, I don't know. This is tough because on the inverse of this, what you could be doing is you're placating your regime. That's where the danger is. So you would leave the next president basically fucked. And it wouldn't matter what the party was. I'm not trying to talk politics here, but I think there's real danger here. I mean, absolutely. That's why we have an independent Fed to some extent, right? Not that I trust the Fed or like the Fed either. Like, and I don't even like. I'm switching back to not liking Jerome again. To be honest with you, I think we should continue QT. These are all my own thoughts, though, too. Not all of these are my own thoughts, but my trader hat, not my Main Street hat. My trader hat wants more QT. My trader hat wants more. Like at this moment, I don't want cuts. Absolutely not. I want them used when we need them to be used. Not only that, inflation is ready to start ramping. The EU just got done fighting inflation. You know, so you're talking about the world economy too. You know, it's not just our economy; it's the world's economy. And I guess the question becomes: do you want to ride the fucking lightning with inflation and wages that they can keep up? And then what does that ultimately lead to? Do you want the longer soft landing or the shorter soft landing with ride the lightning? Right or wrong? Am I wrong here? Am I speaking out of turn here? I don't know. So we can party hard. Yeah, and I don't think this matters. The party matters here. When you're starting to assert this authority over the Fed, it can be used for, you know, I would assume any party would try to abuse that, right? Fed policy. I mean, I understand the logic behind this. I understand like the theory behind this, but once you add in humans to that theory, it'll be abused and used, right? That's what we always do this. We do this with everything. So, in theory, everything looks great. We can write out all we want on a piece of paper and say, if we did this and did that, that would be great. But we know that there's that human component for abuse, right? That's why we have independent agencies and stuff like that for some of the things that we do. and some of the stuff that Hassett's saying here. I mean, I realize there's politics in the Fed. I realize that the Fed will try to be accommodative to most White Houses to see their policy through. Like, I do believe that the Fed independence still wants to serve whoever the current president is or regime, whether that's the president and the House or the president, the House and the Senate, or no matter who it is. There's some attempts to be as accommodative as you possibly can so they can get done what they want to get done. And I think the same thing happens in the bond market too, to some extent, for the long end, but I don't think it was like actively, fuck this guy and fuck that guy or whatever. I don't think that's truly active. And seeing Hassett this morning, like some of the stuff this guy's saying, I'm just like, this is the mouthpiece talking right here. That's verbatim what he's saying right now. So, and we've got a scheduled cut for tomorrow for 25, or everyone thinks. Remember too that there's always the everyone thinks, and we've had a very non confrontational Fed. I forget what the words that he used about the words that Jerome used this morning, but basically we've been given heads up from the Fed, right, in advance. The old Fed used to be like a rate hike, like unknown emergency rate hike, something like that, aggressive Fed. That has not been the case since COVID. And then, of course, we have the gambling side of rate hikes and rate cuts. And then are we actually getting a rate hike or a rate cut? And if we didn't get a rate cut tomorrow, that would be like dropping a bomb in the market, right? I would think. But I don't know. I would think that the market might react well to that. To be honest with you, no rate cut, the market would go up. I think if we get the rate cut tomorrow, you want to see 4% down, I think it's easy. 3% down, easy. That puts us at the weekly trigger, too. And this price action is mimicking December of 2024. And that was a hawkish rate cut. So if you're looking for that blast up tomorrow, you'd probably err on the side of no rate cut. But then you're messing with the assertion from policy from the White House, right? At that point, you're now fighting with the White House. And how do you show your independence of the White House? No cut. I'm going to be honest with you guys. No cut. As a matter of fact, I would give no cut, and I would say if conditions deteriorate, I'm willing to cut an emergency cut. I'm really a believer in pricing cuts in or pricing no cuts as a whole different trade than actual cuts. So this looks like it's sufficed here. We've done 1, 2, and 3 right here. So we're just going to watch now and see if we can pop a new high to go higher, start another trend higher, or if we start a trend lower in the end of the day. So you want to watch this price action right now. Now you want to watch this stuff right here. You can see the bat wing forming here. We just want to wait and see if we can start a new trend up here to the upside or not. This week could get a nice liquidity grab here today. We could trade 87, just so you know. But I would think that if we traded at 87 today, it's only for a grab to sell us down to the depths of hell tomorrow. We're in downtrend right now. We're not in uptrend. This is not buy calls every day. We're in downtrend right now. We've been in downtrend for like 2 days. We are in downtrend right now. I mean, I'm down with going uptrend, but I want to sell the fuck out of this market. I'll be honest with you. It's just a matter of where. I'm going to assume here from looking at the prior price action right here, in this downtrend over here, that I'm just looking to bury this fucking market tomorrow. So cheap ass 0-day puts on the high from today. Or, yeah, on the high from today or even the open tomorrow. Whatever the high is and tomorrow's open, sell the fuck out of it. That's where I'm at. Don't do anything today. You just look for the high today or tomorrow and sell the fuck out of it. I'm being honest here. We're basically in an operation of just buy fucking puts on open tomorrow or even today's high if they did it. I mean, it's not going to be the exact same price action. It normally isn't. But you find a high and just start selling it. If we can get up here today, if we can get anywhere up here today or tomorrow's open, these two red bars right here, I'm probably going to take a pretty significant put position into tomorrow or Friday at least, something like that. I'll have to look at the chain first, but I'm getting pretty fucking bared up here. But I'm being honest with you guys because I'm not normally this bared up, but I would like to see us trade like 676, but now I'm looking even lower. The weekly is at 644. So 650. Mm-hmm. What are those puts looking like right now? The only way I see us getting out of this is no cut. I know this sounds so like awkward penguinish, but I mean, what are 650s for Friday? The 12th? $6.50s are 10 cents. Oh, God. For Friday, too, with all kinds of time on them. Well, the options market's not pricing that in. Options market definitely doesn't have that on the radar. 10 cents for Friday for 650. A long put. 650p. And it's a $9 it's a $9 pays $764. Whew. Well, no, wait a minute here. The 10th, it would pay $450. Mm. Oh, I want 650 to close them out like Thursday. I'm being dead serious. They're dirt fucking cheap too. They cost nothing. And what the fuck would that pay? That would pay something fucking ridiculous, right? That would pay $1,000. Would pay 43,000. Some roughly that, somewhere in there. But the numbers are kind of wonky here, but and not only that, you don't know the OI or the IV. That'd be a nice fucking Christmas present. What's good I do find kind of fascinating is that the market's not pricing in that move lower. Let me just look at some gamma here really quick. I'm just getting back in the chair. I got in yesterday. Welcome back if you're all back. So let's just rehash a bunch of stuff here. I didn't take Thanksgiving off for a vacation. I worked, and so I had a few things going on. I've slipped a disc in my back, I think. I don't know exactly what's going on with me right now. My health is in decline right now. I don't know why. Doctors don't know why. I keep going to the doctor. Meanwhile, I have children and a wife and family. So, and it's the holidays. So I'm like burning the candle at all ends right now, trying to service my obligations to the people that I care about my life to, and you guys, right? So, I'm like running over here, running over there, running over here, running over there, and I'm finally unwinding it all right now. So what I did do is I had to take care of some family over the weekend, and I'm also physically in some pain. So I flew. What's ironic is that when I left on Friday morning, 2,000 flights were grounded around the country. I was caught in that. And then when I came home yesterday, my flight was delayed again yesterday. I thought I was gonna die yesterday. It's the first time I've flown where I felt scared. I think in any memory that I have, I was sitting on the tarmac yesterday trying to leave Boston, and I felt like a bump. We were like going forward, and all of a sudden it went whoop. And I was like, that's not normal. I was like, that was like flaps kicking up or something like that's what it felt like, that they triggered the flaps. And they stopped the plane in the middle of the airport runway. And the captain was pretty honest. I was pretty excited. He was honest. He just said, something just turned off in the plane. And I restarted it, but I don't know if that means it could turn off while we fly. So he said if it turned off when we fly, the plane will fall out of the sky. I said it right over the intercom. He goes, I'm going to call the company that makes this thing and check with them first before we take off. And of course, the whole airplane is dead quiet. So I'm sitting on the plane and I'm like, oh, fuck, here we go. And we taxied around and like parked the plane in this like other part of the airport. We waited another half an hour, and I'm assuming they got the company that builds that part back on the phone, literally on the phone. And so I freaked out yesterday, of course, right? I'm like, how is this happening to me on Delta? It's supposed to be the best airline out there. So I was delayed coming back last night. Did a quick stream in the middle of the night last night for about half an hour or so. And then went and ran off to my daughter's. My daughter had her. You guys, some of you guys know this already because she does it every year. But my daughter picked up clarinet, and she's been amazing at this thing. She's worked her ass off playing clarinet. She studies every night. Every single night she studies clarinet. We hear clarinet playing our home every night. It's one of the most beautiful things to hear a child play an instrument. And as they progress, how they read sheet music and they learn rhythm and tempo and solo pieces, and it's just amazing. So last night I went out and did that with her in the middle of the night, and I'm just getting back in the chair this morning, literally. I woke up this morning. I was a little like hungover from travel and all that. Not from drinking or anything, just like hungover. So a little bit of a slow start this morning, and then last night I was up with the Discord because I have to catch back up, read everything, consume everything, consume all the white papers, read all the Wolf Street stuff, read everything, policy-wise from the Fed and from the little chairs, and Hassett and all those kind of guys too. And Besant, and I think people think I'm bearish here. I'm not. Theoretically, I'm not bearish. I'm bullish. And I think we ultimately go up into the end of the year. Let's talk about that right now. Because I was discussing this in the Discord last night, and I want to clarify. Maybe I'm coming off as bearish to everyone here. I'm not technically bearish. If you go back into the hawkish cut that we got in 2024, it was a major downside move, and we still ultimately went up and printed new highs, but we don't have any volatility in the market right now. We have volatility suppression or compression right now in the stock market, and when you have that, the market looks for things to create volatility. We also have VIXpiration coming up next week. We've got quarterly OPEX. We've got to look today. We're going to be looking today at the collar on the market. We're going to be looking at the gamma in the market today. We have a lot to do as a group today. And we talked about what needed to, let's start with what we needed to do. We'll top line this. So let's start with go to the trigger screen here. Let me go with this here. So I realize that this looks like a cup and handle here. Cupish to a handle, right? A cup, right? Got your handle down up. Kind of looks like that, right? You could also call this reverse inverse head and shoulders if you wanted to. This would be a shoulder, a head, whatever down move this is. Whatever down move this is here, that's your other shoulder, right? Or even down there is your shoulder, two to go higher. You've got the double top. The bears like the double or triple top or double top or whatever. There's a head right here. There's a shoulder, and then plunge, depths of hell. That's all your traditional charting kind of stuff. What I like to look at here is what did we do back here? And we did everything we needed to do here to test all-time highs. And that's that little tick right here. This little tick right here, we don't want to lose sight of what we did over here. We took out this or touched this prior sell up here. And so if you're going to top line this, the bulls did everything they needed to do up here. And now it's just a matter of finding out where we have the young gym bros and the old gym bros. So this is basically dumb money and smart money, right? You've got dumb money and smart money on sell side, and you also have dumb money and smart money on the upside. Now your dumb money will disappear. Your dumb money sellers and your dumb money buyers will tell you it's only up, and they will disappear. If we go down, they just disappear. Yeah, that's what they do. Your smart money just kind of sits in the background. They're very quiet. And they come out to play only when conditions are right for them. You'll never hear them ever pontificate about up show, down show, that kind of stuff. They're just sitting in the background waiting for price to come to them. Think about that. Okay, so your smart money is quiet normally. So where is smart money? Do we know where smart money is? I do. It's on your daily trigger and your weekly trigger. It's where it always is. And if you're looking at the beginning of this down below, this is basically where your smart money stepped in. Right in there. They stepped in again right here. Right in there. No, they did step in over here. They stepped in somewhere in here. I want to say right about here. Maybe slightly lower. Right there. Now, you also have to remember here that if they started this trade up here, right, they took that trade right there, they took that trade right there, this is probably dumb money. So we're looking for volatility to bring price back to where these guys will buy it. You'll hear this with bears too. It's not just bulls, but like bulls will tell you something like, I don't know, it's the up only show. It's a up only, up only, up only. But you normally get these pullbacks when people least expect it or dumb money doesn't expect it. You'll get pullbacks here, get pullbacks here, 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 here. You know, they're there. You get them. And usually it's your dumbest money that's in here. They're fighting for this kind of shit right here. You know, these are the guys that are telling you we're going to hit 7,000 right now. And they get shanked down to the downside and taken to the cleaners, right? So your smart money is not right here. I can tell you that right now. I can promise you that your smart money is lower right now. Even if you got a pop up here on FOMC, you'd still see that draw back down again. Now, when does that come? When we need volatility for that downstroke to happen in December. People forget that December is a volatile month, even though it prints. There's a lot of volatility historically in December. Historically in December, there's still a lot of volatility. And not only that, but next week you have Vixpiration, the 17th, 9 a.m. And then you have Quapex. Right here. DivX this year. Just check when is. be around December 19th. We got DivX in here. We got a lot going on, don't we? Fear and greed index is at 35. Crypto or the regular fear and greed index is becoming fearful now. So the bigger question is here, what event happens to bring volatility? Is it going to be FOMC? Is it going to be Vixpiration, or is it going to be QuapX? And I want to show you one more thing here, which is in 2024, so this is 2024 right here, right? This is December 18th. So we wind up blasting down, and we do get the new all-time high, another all-time high up here. So the question becomes more of positioning than, hey, we're going to go up. So positioning and like, where are you positioned for the new high? And when does that new high come? So in this instance, it came post the year end. So you got your new highs on January 23rd and February 19th. So when I left you last week, I said, what to you? Last week, I said to you, we've done everything we need to do up here, close out your call spreads, and we will reposition in mid-month volatility. So if we've done what we need to do, we need to check. We've done what we need to do in these sellers up here. We've got old gym bros, right? We've got the old gym bros up here. We've done what we needed to do with these guys. And then we've got old gym bro buyers. So these guys have pushed price all the way up here to these guys right here. And so these guys are probably, you're saying they're right here. I'm saying they're not. I'm saying that they're lower. And that these guys will wait for price to come to them, or they won't participate. So even if you get a squeeze up here, should still come back down. They'll be waiting to take that one up. And if they don't see the bounce, they'll go lower. So let's say you get the squeeze up here. They would still be waiting down here. They would still be waiting for that opportunity to get long in here. If they don't see that price action, so we pop up and come down. Well, I'll give you the pop up. We bounce right here. There's just stalling. Then down here, they would wait here. I can't no high in here. Okay, wait down below. So, just simplified, these guys right here, you're kind of looking for that volatility. So patience is the name of the game, I would think. VIX, you know, trading 1683, looking pretty bullish right now. VIX 9-day looks pretty bullish here. There's a gap to close down below, but VIX 9-day looks bullish. I even charted this out for you last week. And I've got VIX cranking. I got VIX cranking up into FOMC and then dumping. This, you know, if it ain't spot up, vol up, then it's, you know, spot down, vol down. The only way that I would see that spot up, vol up scenario here would be an unexpected decision from the Fed, which is no cut. So these guys are being patient. So it's not like I don't see the upside move in here. I mean, just if it was just a, you can kind of see it right here. Not like I don't see the 7, it's like 715 or something like that. You can kind of see where these guys are. They're right over here. They're buying there. They're buying right in there. This is all the smart money. See the smart money? Smart money is just kind of hanging out, waiting for price to come to them. Wham up, right? Wham up, wham up. Up, 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 up. That has been the trade. So you're still kind of looking for that. Even if you go up, you're still kind of looking for that, you know, that touch. Whether that's going to be FOMC, whether that's going to be Vixpiration, unclench. They're just waiting down here. Now, in this case where we are with this FOMC meeting in particular, TNX cranking, TYX cranking, Dixie cranking, HYG blasting down. They're all in unison telling you that there's a move coming to the downside up here. When I see this move up here, 30-minute there, hold on. The only question I have is, how deep is it? Is it here? Is it here? Is it here? And then you get your 650 to 715, which is juicy as fuck too. And this, of course, is in January, February. The other problem we have right now is, we're going to go over all this together right now today. The other issue that we have, not really a problem, but the only other issue that I can see right now is we're losing velocity, a little bit of velocity in here. Not necessarily going to be negative, but let's take a look at, let's go back and look at the, see this velocity right here? We lost that daily velocity in here. We lost it in here. We're kind of dogging it right now. You see it right here, kind of dogging on velocity. Series of lower highs on daily velo. So you just kind of like plunge team here. This hourly looks okay for a small jump, maybe small bounce, but the half an hour, 30 minutes cranking right now, but the or 30 minute velocity, but the hourly velocity looks like shit. Daily velocity looks kind of like shit. And you can see the downtrend. So like if you're a traditional chartist kind of a guy, you can see it right here. There's the red tip off. Here's the red tip off. Sellers right here. Sellers right here. And I'm assuming they're going to be parked right up here again. So up move, yeah. Then down move. And this is a downtrend down here. It's not an uptrend anymore. You actually see two buyers there, right in there, right in there. Kind of see it right there. Sellers right here. And you're going to assume that they're going to sell this right down again right here for new lows. This is Wednesday, 1600. Pink tone setter, guys. And you've already unlocked all this stuff. Do you see this? This one is unlocked downside. Now we're just waiting for this one to come down here to unlock that downside move in there. There's a gap that needs filled right here. This does the halfback trade in here too. FBAC trade right there. Giant gap left back down here, the 60s. This is all that needed done. So this is all that was needed done to send us lower. That one right there too. Now we're just waiting to unlock one more down below here. That one's already been hit. So we just need that one right there. The door, we have to open this door right here. We have not done yet. That's 681.15. That back there for a minute. Wednesday. Where's Wednesday? 10 a.m. Right there. It should look something like this, right? Up, down, and then some kind of drop up in here. Oh. Tuesday, 1600. That's if we get a rate cut. Should be something like this. And then teeing off to get down in here. That's where you get your target of 676. This is your first chance to really buy a dip. Like somewhere down in here. Now, the only question that I have here is how deep does this go? There's Thursday. I want to say that the only thing that I have here is that where do you buy the December dip? Is it on the weekly? This is 640. This will be 650 by the time we get there, or is it 676? One or the other. Not only that, but there's something else here too, which is that the weekly trigger is coming higher. You know, right here. This weekly trigger right here. Is right where the old gym buyers are. So shank this all the way down here. There's your 650. And you're still holding where the OG buyers are. So we either have to be waiting for a handhold here or a handhold here. The only other thing I can think of here would be that, you know, everything's going to be honky-dory tomorrow, right? Come into your Vixpiration. We're going to look at some other stuff here. We're going to look at Gamma in a minute. We're going to look at the collar on the market too. But I'm assuming that the young gym bros are telling you right now it's the up-only show. It's new all-time highs in here on Fed Day, and then it's going to go, you know, 700 quickly, and then 715 by end of month. But just a melt-up begins. What's going on, Talking Monkey? What I'm seeing here is this: I'm gonna top line it for you. I'll make it really fucking simple here. You're either subscribing to the idea that there's going to be no volatility in December, or you're going to get spot up, vol up. Option 2. We just enter melt up mode at the end of the year. There's some potential there. But if you look at historical examples in December, if you start looking back on every December, you want to do that together? We can look at that together. Let's look at some Decembers. Let's look at some prior Decembers. And we have volatility. I already talked about that one. Volatility. Here's some volatility here. That's what you're looking for, the crankorama. 13th. Up, grind. Here's the 19th right here. Here's the 19th. Cut, dump. That's 2023. Real trade higher later. This is 23. 22 was a bear year. So let's look at excuse me, 22 is a bear year. So I don't want to count this one over here. So let's count 21. December 7th, 8th, 19th, 17th, 18th, 20th. Volatility. 19th, 20th, volatility downside. So you start counting 2024, we had volatility mid-month. 23, volatility mid-month. 21, volatility mid-month. I'm not saying we can't have it, but I'm saying that if you look historically, even if you don't have a down month, here's another funky ass one right here. This 21. Fucking cratered. Look at it. We fucking cratered. And then it was a whipsaw straight up. Like the juggernaut. But still. You know, so that's 20, 21, 23, 24 volatility. So the only question I would have here would be if I was to look at past historical examples of the month of December, we get volatility. And positioning matters. And if everyone's on the same fucking boat to trade 700 or 715 or whatever, you know, forget the 2018, sell it into Christmas, but you are looking for, you know, one of these fucking events here to either show you, using your rules, a bottom, you know, if we're looking for, you know, some kind of bloodshed down here, but then we get the new high, we're up and out of here. If we get the bloodshed to the downside and it starts putting around over here, we know not to buy that already. We go over these rules every day, right? The other thing here would be if you're on team no, we're not going down, Cap, everything's gonna be fine, it's a trap for the bears, all that kind of shit. They're like, hey, Cap, we're just gonna go up. Well, we know what we're looking for, right? We know what we're looking for here, right? So we would be looking for 1 here, right? 2 here. And then we'd be buying this back test right here, right? But when do we not do that? There are times, right? Like NFP, binary events, right? We don't do that. We step off the market on binary events. So this could actually look pretty bullish into tomorrow. And you're like sweeping in here to take that buy. And it's a trap for bulls. So there's a trap in here for bulls tomorrow. You're recovering the daily trigger. You're up here, right? And on this pullback, whatever it is, on this dip buy, it should fucking crater down here. Theoretically, you're buying this coming into tomorrow. If you're a systematic trader, you would hit this one, hit that one, come into tomorrow, and you'd auto buy that for moonshot. But if you don't trade certain days, binary events, so you get the new all-time high, you'd still come back down, wouldn't you? So you'd want to pass this. Even if you're bullish, you'd want to allow this to pass you by. You'd want to pick it up afterwards. And counter arguments here would be no cut. In my view, you'd get you'd come in to get this rip higher here, come into the Fed meeting, and the Fed chair says no cuts, and everyone's going to think that's bearish, and up we would go. The bond market is screaming to you right now not to cut tomorrow. This is TYX. All this here is telling you no cuts. TNX, no cuts, no cuts, don't cut. Dixie screaming higher on good jobs numbers. HYG rolling down over here. So if your argument is up only, it's the pump show, I would expect no cut, to be honest with you. Because the bond market's telling you point blank right now, they don't want to cut. So in that scenario, you get the cut. Bonds should rip faces off. Market should go down. And then you would have your end of the year trade thereafter. You know, deal with all this bullshit in here for the 19th, and then we're up and out of the slipstream of the, you know, the collar taking over and Vixpiration and DivX and all that kind of stuff. And I haven't checked the spreads today. I looked at them last week, but I'm assuming that you might even get some help from traders with spreads dumping on market in here. And they'd probably come back in to save our asses over here. So that's what I've got for us right now. Let's look at a few other things here. Let's look at Gamma really quick. So I'm not necessarily bearish here. So I don't want you to think that I'm bearish. I'm not. I think it is the up only show, but I think that you have the opportunity for some volatility. You have the opportunity to spike some volatility into Vixpiration. You have the opportunity to buy lower. That's my only thing here for that ultimate, squeeze or whatever we're doing. Let's look at gamma really quick here. You know, and there's a giant ass gamma here on 7,000. Let's look at this together. Yeah, everybody's long for 7,000. You can see it right there. Everybody's long for 7,000. Everyone's getting hedged. That's good for squeezing. 68.45. So everybody's hedged out. That's good. Just let me see some of this here. Volume 2 date. You're all buying calls again. 685s. You got puts for 683 and 684. Let's look at SPY net gamma. Anybody down on 650s? Right there. Look at that hedging down there. Woof. 650. So there's a bunch of gamma at 650. $690, $695, $700. SPY's trading $685 right now. So we're looking to trade $690, or here's $685. SPY's trying to squeeze up here to $690. CTAs. Light sellers. We need to lose 676 for them to become sellers again. Vol control. These guys are, this is good to see. This is saying that vol control gang's willing to buy 676. That's good to see. Asset managers net, COTs. They're sellers currently. Seasonality has us coming down one more dump. VIX 9-day would like to see one more ramp, or that's an hour later. You're definitely going to get some sellers in here, just a heads up, on this 4-hour tick. Let's look at this really quick. Here's your 4-hour sellers right here. Here's your bad guys up here, but I think they get squeezed out. I still own Bitcoin. I've closed call spreads. I still own Bitcoin, still own Target, still own a bunch of other shitcos. Why is Bitcoin up? Fear. Fear. It has to do with the bond market. Questioning if we can, if or question. It has to do with questioning if we'll have to reissue new bonds and who's going to buy them. I know they're going to demand more. If you're on sell side, and you want a position to hedge for tomorrow, I would be trying to position off of somewhere in this yellow and red box up here. So it's between today and tomorrow at 10 a.m. So if you're on sell side, your next position to open is likely where that yellow and red box is right there. If you are sell side, I think it's very easy for us to trade 650. I don't have us going there right now. I only have us going to 676. So this is what I would say to you if you're on sell side. If you're on sell side, I would say you take the 10-cent. It'll be cheaper. When we're up here, it'll be cheaper. But what you do is you take the trade for trading 650 by like Friday. I think there were 10 cents earlier. I would ride that fucker all the way down there as far as you can. I wouldn't do it to in the money, but I would do it to where you're cranking. You're making, $30,000-$40,000. You're trying to capture the OI and not the target. The IV and OI are trying to capture and not the price. If we bounce off 76, 77 and the trade is going to die, let's say it gets bought, you exit that trade and then become a buy the dipper on 76. There's a few other things here I want to tell you guys. I know this is going to sound fucking crazy, and I am in the minority. I think the chances of us not getting a cut are rising. I think that's good for the market overall if we don't get the cut. This Fed has not been adversarial towards the market. I'm on the fence about us getting a cut right now. So I know that if you look at the history of it, when it's priced in, it's priced in. It'd be fascinating to see the Fed say no. Hassett's commentary is Trump speaking. That's what it is. So there's politics in the Fed, or going to be. The only other thing I have to say on this is that Powell doesn't like to rock the boat. So man, I don't know. I'm trying to wrap my head around all this right now, and I'm trying to see every angle of this. I'd be fascinated to see if we don't get a fucking cut and the market moons. Like we bleed down to 76 and then all of a sudden the market's just going fucking vertical. Yields would calm down immediately and it would be very supportive of the market. No cut, believe it or not. This is a fight between the bond markets, the Fed, Treasury, White House policy. If you're a bull and you think the market begins to run away today, and you think that it's the up-only show, I guess there's three people here, right? There's the seller. So I discussed the seller. You know where to sell. It's up. It's above. It's up here. If you're the up-only gang, you're probably looking for no cut tomorrow, in my view. That's going to sound crazy, but you'd likely see some weakness down to 76 and then no cut, knee jerk down, straight up again. That's what I'm going with. If you're the up-only crowd, you're like super FOMO-able, and you just think the market runs away to the upside, I guess. No pullbacks. Hourly trigger, you would be looking for this trade right here. I'll give you the back test right now. Back test would be on 685. So you would stop at this right here. You'd be looking to buy the hourly trigger on volatility with you'd be long right now, and you'd be looking for a dip buy right in here to go long tomorrow at 2 p.m. on 685.26. If you want to know what I'm doing, I want to buy some fucking puts on 6. Where is that right there? 687 above, anything above 687.50. I want to buy some puts. And I'm looking for at least a trade lower to 676. If I get left behind and we trade or the bulls, the up only FOMO bull crowd is right, I'm wrong, let's say. We crank, I don't know, we get a cut and it's not a Fed whatever cut, it's all the way up here, we're like mooning or something, they leave me behind. I will actually still wait for a back test over here. I'm going to hang out with the smart money and be lower for a dip buy. Be waiting to buy this, 676 or 650 or whatever. And I think I'm also going to put on some puts. They're so fucking cheap. I don't care if they burn. 10-cent puts they'll be even cheaper when we get up there. So 10-cent puts up here, I think, is a fair trade for Friday. If they don't print or whatever, if we start blooding here and they don't start printing, I'll probably be given an opportunity to at least get out of that trade or take some off and leave some on or something. I just can't resist buying $1,000 of puts that could print, 30, 40, 50 fucking $1,000 or whatever the fuck they're worth. Watching Bitcoin go up. This price action looks like we're pricing in the inevitability of a rate cut tomorrow and the Fed being compromised. If I have to guess on this, I wish we didn't get a cut tomorrow. I wish that Jerome, I'm going to make this public. I'm going to say this right now. I'm going to say it right fucking now. If Jerome Powell was out there right now listening, which I know that he's not, but if he was, I would say to him, no fucking cut tomorrow. Stand up for the Fed independence. No cut. The market is pricing in fear right now of this new policy. You can see it in Bitcoin right now. It's going straight vertical. You can see it in 10-year, 30-year. You can see it in HYG. And this is down the road. having to pay for and service these bonds. So I understand the concept of what we're trying to do here with the Fed and the Treasury, in particular, separating them a little bit more. They already are. Like, the short end really doesn't impact the long end, but it does, kind of, sort of. If you're cutting, you're going to see the long end rise, right? If this is meant to appease the markets, and I know all about the fucking tariffs and all that kind of shit coming in and all that kind of stuff, but I'm sure there's some fear here, in the machine in the background. So, and it's showing that we're getting the cut tomorrow. So, I'm gonna tell you that I hope that Jerome doesn't do that. The market is pricing that probability in, and future cuts into January and beyond. And we start ramping inflation here. I think it can work for a little while. I mean, sure, inflation starts ripping, wages keep up for a bit. We run the economy hot. I understand the truth of that. And of course, that means the stock market is cheap. So after a pissed off bond boys, right, market should rip faces off to price in the cheapness of money, in all honesty. But it's not like the market's going up because of merit either. So I'm aware of that too. I have real fears here in the future. We have the end of QT coming. There's going to be discussions tomorrow about liquidity at the Fed. There's going to be questions about QT ending. Are we pushing ourselves into QE? If we come into an end of a business or economic cycle or something we don't see, if we have no tools like cuts, that introduces QE. That's what it does. I want to say something here if I can, like something I gotta say. I get this out here. Rates were the norm. If you're a trader out there, an investor out there, rates were the fucking norm in this country. And from 2008 thereafter, we've always needed fucking QE. And you're at a moment where we don't need QE. And we're going to squander it for a few fucking dollars. My mind is fucking blown here. That, you're like at a moment in history where there's nothing bad going on. You can leave rates higher. And you can slow the economy down. And, do you guys want more QE? I mean, that's an honest question, isn't it? Do you fucking want more QE? I mean, I used to joke about that shit. Yeah, I want more QE, of course. But you don't get many opportunities to claw back what happened in 08. And when something really does go wrong, whenever that next thing is, there's always something. You want to have those tools available, all of them, depending upon what you need. It's kind of gross, to be honest with you. Yeah. Does everyone out there hate inflation? Because that's what we're asking for here. I mean, like you're talking about like the first moment that we have like inflation. I mean, it really is coming down. And I just looked at some of the ECB inflation numbers, and it's like you're just now fighting this shit down, and you want to party again with cocaine. You know, it's like just give it a breather. Just give it a breather. The economy is in good shape right now. I don't know if you're out and spending money, um, or if you're being hammered by inflation out there. I really want to know like what you're all expecting out of this. You guys want to rip this up because that's what we're asking for. Like we really are. We're asking. Do you really want to go back into what we went into in 21? That was obscene. Can't believe I'm saying that right now. I mean, we just did this. They just ended QT on December 1. And it's like, let's fucking party. And I'm like, why? I mean, you could, like, if we had no cut, the market would be okay. The economy would be okay. I'm actually shocked that I'm saying that right now. Maybe I'm getting old. Maybe I'm a boomer now. I don't know. I don't know if I'm a boomer, but I still think we get that fucking cut. But god damn. I really think if you want the market to go up, no cut would send it higher. I really do. I think it would send it higher tomorrow too. I think outside of a knee-jerk reaction, you'd see the market recover quickly. No, I don't. No, I do not think it's related to regional banks. And I don't think it's related to. You have to understand that if you get this cut right, your mortgage rate's going to go up, not down, up. I don't think there's any risk of collapse from the banks, nor do I think there's any risk of collapse from the housing market or anything like that. There's no data that supports that argument. It's the same as this bullshit they were just spinning. We were just spinning a bunch of bullshit. There's so much bullshit right now. It's not even funny. It's like some of the worst I've ever seen. Like the typical home buyer age is going up. That's false too. There is so much scam. I feel like I'm going on a rant right now, and I shouldn't. But there's so much bullshit being spun right now. It's not based in any fucking form of reality. The average home buyer age has remained consistent. Is not like what are they saying? The first time home buyer age was 40 in 2025, up from 33 in 2021. False. This is a cash grab, man. That's what this is. Power and cash. Try to get up over this one here for 12. Way is higher right now, just so you know. We had our thing right here. We got 1, 2, 3, 4, 5. Something like this. It's so bizarre because you know that it's not as bizarre. It's like ironic. I don't want this. I don't like that. I don't want this. But let's get some rate cuts going. It's like an oxymoron. The total fucking oxymoron. You see my fur? I'm not bearish here. I'm not bearish. I'm actually, I think we go up, but at least volatility, I think we get shanked on that rate cut tomorrow. I think we get shanked on the rate cut, and then I think we'll go up there after, of course, because of the rate cut. Yeah, we will go up. We're gonna trigger like a pretty big upside move. I mean, we're gonna set fucking inflation on fire. That's what we're gonna do. Yeah, because you'd have the rates cut below the inflation rate. Negative real rates on savings. And then you're gonna see fucking the real rates go to the fucking moon. You're gonna see. You'll see. The outcome. The end outcome of this is like when the party's over, it's gonna be stupid. Like I wasn't really a fan of Volcker at all, but god damn. Yeah, austerity. Yeah, I see that too. Jesus Christ, I want to fucking sell this thing. I want to sell Bitcoin so bad right now. Bitcoin should moon to like 130,000 fucking dollars. Yep. It should fucking rocket. I still think we have one more low to put in, but I gotta look at Bitcoin. Thank you. Can I get 97,000 right now, maybe, or close to 100,000? 97 and a half. Sell it and come back in for 90 to 100. 104,000. this one over here. Clock up there. Yeah, we're close to a roll. We're not quite there yet. We should get a couple more jams. If you're in anything like if you're gonna follow me, right? You may want to consider this should be a big topping action here into tomorrow. And there should be another dip to buy to go up again. Either tomorrow at 76 or lower. You're loading the puts already. We have two more bumps higher, I think. I think that like Bitcoin can definitely trade like 97.5, and then you'll get the roll. I'd be buying puts on Bitcoin at 97.97500. Start thinking about puts on SPY. Oh, you still have your fucking hedge? I'm gonna hedge myself out up here on I believe I'll probably do it to either the close today or the open tomorrow. I'll buy my puts there. I think they're gonna cut. I don't think they should goddamn cut, but I'm gonna tell you what I like how I feel and what I think, and like how I feel is I want Jerome to come out and fucking no cut, fuck you. What do I think's gonna happen? You're getting the cut, and I think we're seeing the end of the Fed as we know it, and the cleanup in aisle 69 is gonna be a fucking mess. It's gonna be an utter fucking mess to clean that up. Whenever that's done, whenever it turns sour. I mean, it won't be sour immediately. The market will go up. I see that, fucking sure than shit. But you're gonna see rampant inflation. I'm gonna probably do 650p for Friday. On this upstroke up here, I'm gonna do 650p. I'm gonna exit Bitcoin. I'm going to check all my other holdings and see what I can get out of. And then what I'm going to do is I'm going to buy 650 puts. And then when we come into the decision tomorrow, wherever we finish, whether that's, 676 or it's or lower, I'll close all that shit out and then I'll long Bitcoin again, and I'll actually long SPOOs again too for end of year. And I'll push the dates out to like Jan. I might push them out to March. I'm gonna wait and see what the options market looks like. But I'd like to see that seven targeting 715 by March OPEX. Hopefully I can close them in February, Feb OPEX or Jan OPEX. But that's the plan for me. Yeah, we got the 10-year note an hour. We got the 30-year note tomorrow. We have auctions. So we have like a fucking battery. Let me go through more of this with you guys here. I want to go through a few more of these things with you here. So we've got all kinds of yield shit. We've got like we got a 6-week bill auction at 12.30 and a half an hour. Now your 6-week should say something here. I wish it was a 6-month, but it's 6-week. We got a 10-year note auction at 2 p.m. We get the MBA 30-year mortgage rate at 8 a.m. tomorrow. MBA mortgage applications, MBA mortgage market index, mortgage refinance index, and the purchase index all at 8 a.m. tomorrow. We get a bunch of employment cost, benefits, wages, cost index. So this would also include wage spiral, right? And I realized too that you know, you got to remember too that like companies, we're trading the stock market here too. We're not trading how you're doing out there. We are, but we aren't. Um, there is a good balance between corporate profits and your ability to spend money. Um, Simplified. Um, so we need your wages to continue higher if we're going to go into like inflation, right? So that you can keep up with it. And we also want costs for companies to stay reasonable. They're always, wanting more profit, right? More efficient operations. It's kind of like manufacturing isn't the same that it was at the turn of the century, is it? Any longer? No, right? We are become more efficient and more efficient. We introduce more machines over the decades to keep companies profitable. But at the same time, you guys need to be paid too, right? You got to be paid for somehow. You have to get a job. Last night, I was discussing with a friend about my daughters and what they're doing in college right now. My oldest is in college. My youngest is still in grade school. But that they have to look for degrees that can serve them as less and less people are required to do things. His point was that he thinks it's a fraud. That AI and robotics and machine learning is a fraud. Quantum compute as well. And he pointed out a few instances of this in the past, where the hucksters come out and tell you we're going to Mars, but we're not going to Mars. And my point to him was that manufacturing has always become more efficient. Not just manufacturing, but all things have always become more and more efficient over time. You see, in my view, I think that the pipeline to the old school pipeline into Fangman, and now TMT, is much smaller than it once was. So if you're going to go to school to be an engineer or a computer science of some sort, that there'll always be some place for you. I think that's going to disappear over time. So I like the idea of like getting an engineering degree in some kind of field in energy, whether it's nuclear or wind or solar or something, even in gas and oil. So I know it's not glamorous like Fangman, but it probably still pay the bills quite well 10 or 20 years from now. I'll talk to my kids about that with my oldest wants to go to, well, she's in microbiology right now. And I'm like, yeah, we start talking about some other things maybe, or what are you going to use that degree for? Yeah, I think you wait for FOMC. I don't think it's worth chasing right now. I think it's worth waiting for a hedge for FOMC, and then I think you're waiting for whatever the dip is. If you use your rules, you should be safe at least. You'll still hear people come out and say, "Oh, I should have shorted this down in the depths of hell." But if you're a bull, I think waiting for the dip to buy is appropriate. I'm trying to see the rip higher on tomorrow. Like, can we just start ripping? I don't think I see that right now unless we get no cut. That's how I see us ripping. Like on FOMC day, if we were to rip, more than likely it would be on no cut. And I don't. The whole market is showing a cut tomorrow. So, you also have interest rate projections first, second, third year tomorrow. So we get the end of the year. The SEPs, right? You get Thursday balance of trade, exports, imports, initial jobless claims on Thursday. You get the 30-year. You get 4-week, 8-week bill auctions at 12:30 on Wednesday or on Thursday. You get the 15-year mortgage rate on Thursday at 1 p.m. You get the 30-year mortgage rate on Thursday at 2 p.m., 1 and 2 p.m. respectively. You got a shit ton of Fed speakers. Then you get the 3 and 6 month auction on Monday, the 15th. Tuesday, the 16th, you get non-NFP, 9:30 a.m. Retail sales, unemployment rate, 9:30 on the 16th. I wonder what the puts look like. If there's any interest on puts on the 16th. We have the 16th. Let me go look at that really quick. Seven days to expiry. You know, 650s for next Tuesday are only 25 cents. Those are fucking cheap too. Those are dirt fucking cheap too up there. And that would do it, right? You grind right down into NFP on Tuesday the 16th. I'm just got a few more things here in the background, guys. We're gonna do some gamma stuff here. So let's talk gamma really quick. Here's SPX. So we have currently a magnet. This is a magnet right now, but not until OPEX or after OPEX, month end, somewhere in there. This is a magnet, but not quite yet. The closer we get to the 7,000 up here, it will begin to repel. So you have like a magnet to go up here, but the moment we get there, it's like wants to push price away until after OPEX month end. Then we can go up there and actually break above it. If that makes any sense to you out there. This is the largest gamma bar that we have. We also have significant gamma at 69.50. Oh, gotta bring that a little bit lower. Make that yellow, make this one red. $6,800 is the gamma flip. This is all pretty supportive here. The market's supportive here. What I told you earlier was that vol control gang is supportive in here. CTAs are not. They're light sellers. They don't become major sellers unless we're under here. They don't really matter at the moment. CTAs don't really matter. Vol control is supportive though of this, and they're even supportive of buying down here. Could get some violence down below from CTAs. and also from COTs. $6,925. That one yellow, we can hit that target, no problemo. These are all upside targets right here. $68.50. This is supportive. So this is all supportive to go up. All your dip buyers are here and here. Wednesday, 2 p.m. right there. Close the gap. The one big thing I would say here would be 6,700. There's a lot of party time down here. 6,775. Your next major bar is way down here. $66.50. This is your put wall. This is the 1400 Tuesday, Wednesday. 10 a.m. right there. Wednesday, 1600. It's Thursday, right? When do we get that? Go back up here. NFP is Tuesday, the 16th. And that's also Vixie Eve, right? That all the way down there. So there's NFP. You price in Vixpiration. And then we're up and out of here. You'd also, you know what else would be happy about this would be spread sellers can unload on the market in here. I'm going to have to delete that. Hold on, I'm going to delete that. Hold on. I'm going to delete that post. Delete message. No. No, you did not. We're just parked here. We're going to check one more thing here, too. I said this to you earlier here. So we're just parked on support. The way is still higher here. In my view, it is. And we should grind this out into 10 a.m. tomorrow. So there's 10 a.m. right there. Do you see it? We should pop up into the close, pop up into the open. We're looking for liquidity higher, in my view. It might not be exactly what it's been in the past, but here's a 1600 right here. I'm still looking for a pop higher. I know you guys are trying to sell it early. I get it. But no. I see higher highs here. I'm a bull, so I'm usually on squeeze your nuts off until we roll. Last possible fucking moment. So no, I'm not seeing any downside here. If we were to get downside here, you'd need to lose what? The hourly trigger, right? You need to lose hourly trigger, get a new low, that kind of stuff. We haven't done that on either of these. We haven't done that on SPY yet either. So way is higher at the end of the day. I still have the targets higher for 685.61, 686.16. And I'd really like to see a high. Here, let me just show you this here. We're just parked on this fucking thing right here. So you're just looking for the squeeze up here. It's a roll like this. It should be some kind of a roll into the close or open tomorrow and then the dump. I'm assuming some of you are trying to front run this right now, the roll right now. If you're trying to front run this roll in here, you still would need the new low. You would need to break this one right here, and then you'd actually sell this one right here. That's where the real sell is, right there. This is a trap for bears right now, in my view. So, this to me is nothing. Let's go back down here real quick one more time. Just let me check one more thing here. Let's go look at the tea leaves. I'm losing stream here. Hold on. And there's JPM collar right there, top strike, right? 6290. They're way the fuck down there, aren't they? Way the fuck down in here. So basically, they're what? They're selling. No, they're buying. Yeah, they're selling this up here. So this, they're selling these calls right here. Can't escape this until 31st. Theoretically, can't get up there till then. We can get up there. They will fucking sell right down into it, right? We're like pinned in to not. There's no path above this until after. I don't think there's a path. It's either going to be on OpEx, but then the roll doesn't come in until after. I mean, there's a way higher here. They roll that fucking collar in here. The collar no longer matters. We can go up here like after OpEx. No, that's Wednesday. There's Friday right here. I mean, there's a way up here. There is a goddamn way up there, but it's like after all this stuff here. I don't see anywhere. I don't see anything in here that shows like doom. This isn't really a magnet just yet. So even if you came all the way down here, it would act like a repellent. If you blast it through this, though, oof. I'm not even entertaining that. Just want blood and then unclench to the collar up here. SPY week right now, parked on 6850. Looking for this tick right here. Four-hour sell right here. Trish is trying to push this down. TNX cranking still, TYVX or TYX cranking. Dixie coming back for more. HYG blasting down right now. Back over there. Fed December meeting preview. Markets and analysts expect a 25 BPS rate cut in December with Kalshi odds at 95%, and nearly all major banks calling for the same. Most see it as a hawkish cut, action with tighter communication. The dot plot shows little change from September with only 50 BPS of total cuts priced for 26-27. Forward guidance is likely to be downgraded, and no unanimous vote is expected, which is rare that it's going to be this decisive. SPY week right now. Four-hour taking another shot here at a downside move. I'm looking to open calls into this close today. Hassett saying 23 minutes ago there's room for even more cuts tomorrow, not 25. There's no way I can make that a doctor's appointment at 3 today. I got to put a long call on here at 3. It's not going to happen. Might not be able to put it on until 3:30. Didn't see that down here. Sorry. I'm just waiting here to see if you guys are wondering what I'm doing here. I'm waiting to see if there is going to be an up move or if we're getting continuation to the downside to get an up move. Is it possible that you pushed my can you hear me? The next available is January 6th. It's at 3 or 3:30. Did you already cancel it? So the next one's Jan 6th. What about the CAT scan bullshit? When are they doing that? Were they going to do that today or no? Can you pass a message along to my doctor and just ask him if this was going to only be my yearly checkup or if they were going to look at my shit today or not? Say there's some miscommunication. Can you please ask the doctor? See what he says. I know. I'm sorry. I just want that to be ticked right there. If we can get this ticked, we're going to rip their faces off, but we haven't done it yet, so there's still no trade. Trade is still lower right now. Just tick that one right there. Hit that one right there. There ain't no fucking way this rolls down. You know that, right? You don't have an event today. There's nothing that can do it. I don't think there's anything that can roll us down today. So it's just a matter of buying a dip.
So the rate coming in at 4.175%, 4.175%. The US is selling $39 billion of 10-year notes, awarding 70.50% of bids at high. Primary dealers take 8.81%, direct 20.96%, and indirect 70.24%.
What do you say?
So that's on the screws there.
For what? Okay. So cancel the appointment today then. This is what we need to watch right here. This we want to see if this green box right here. We want to see if that gets hit or not. Need to hit this one right here. If not, we'll chase it to the downside into 330. You want to watch this this high right here, this high right here, and then this high right up here. If they do roll us down, we have to watch this one here to roll down into this and to 330. But
Seeing the yield on 10-year Treasury notes hold steady after the auction, last at about 4.1722%.
TYX going down, that's good to see. TNX going down. Dixie chilling for the moment. HYG with a bid.
Seeing shares of JP Morgan extending decline to 4% now. Again, after the comments from JP Morgan's Lake.
My stops are about to be taken here pretty soon. And JPM saying, JPM's Lake saying, U.S. consumer is still healthy. I agree with that. Consumer environment looks a bit more fragile. Yeah, fuck yeah, it does. If you cut, you're going to make it fragile. We know that. JPM sees full year 2026 expenses at 150 billion or 105 billion, excuse me. Expects IB rev to be up low single digit percentages in Q4. I'll look for charge-offs and credit cards and other loans slightly improving. They're going to come in here and try to take my stops here. I don't have them on them, but I'm going to have to turn them on. I'm going to have to stop myself up here. What I'm going to try to do here is try to blast through this and then down into 330 here. So I'll check this real quick, this 4-hour candle. I could just fucking leave these things on too, can't I? It ain't gonna matter if we blast down here. That 4 hours holding steady just fine. This one was good. This one's valid. This one's good. This one's good. Still long here. I better see a fucking move like quick. Like right up there. Way up there. So you can see it over there. So I'm being given an opportunity to get out right now, but I haven't sold. I'm still long.
Surely expecting the Federal Reserve repo operation data.
We've got a 10-year note auction coming up here at 2 p.m. too. That could plunge the fucking market here. That's not a good tick there. Up. Like it needs to literally green fucking bar.
Columbia Senate Committee rejects government's tax bill. 10 counterparties take $3.211 billion at Federal Reserve repo operation.
This is a bad bar right here. Push that motherfucker up. Take all their fucking money. They're too early. They're not gonna get their crash until tomorrow. They think they're gonna get it today, and they're not gonna get it today. They're early. I know they're early. Get back up in this fucking thing. They're too early. Prints me 87.50 into the open or the close today. They're too fucking early. Keep on going and pushing that fucker up there. Hey, hey. Hey, you. I just said, hey, you. Shouldn't have said that. Back in there. Fucking go vertical. Go vertical. That was inside my cup. It was pretty gnarly. I don't know what that is. That's all right. I was gonna show it on the show, and then I was like, no, fuck no. It's pretty gnarly. Yeah, it came into my lips. First thing I thought was, I want to send it down here. I'm still long right now. The thing is that this is no longer valid here. This is no longer valid here. So we kind of have to hold this up right here. If you're long at all, if you bought this dip, you have to be you'll be given no other there'll be no like second exit. If we go down here and start smashing this at all, it's going to blast the downside. So you got to have to be really careful long here. It's taking me right back down and grinding me again now. Same trade still in here. If at any point you see like something like this, what they'll do is they'll shank this right down here. Not there yet, but keep on pushing. Keep on pushing. Don't stop now. Keep on pushing. This is a shitty candle right here too. So this is a tweezer, reverse tweezer here, trying it again. And I'm up a penny, 2 pennies right now. People are getting bared the fuck up. They're getting scared. You can see it in here. Big sellers here. This is not bullish here, so I'm watching this price action right here, and I'm expecting. I did get the high tick right here. Just want to show you that, guys, this price action here. So you got that tick right there. This was good. This one was good too. Another high tick, but the stalling is a problem. I'm going to give it a couple more minutes here and just watch this last one right here. If this one breaks, though, I'm going to pull the plug right over here somewhere. And I'll come back at 3:30 for another try at it. Still holding it, though, right now. We did get the high and the new high, so still going to stay long here. Just for a minute, we'll see. It's staying alive right now. Someone's selling for the 2 p.m. 10-year note auction. They want that more down in the close. Still long here.
So just a summary of what's happening in the market so far. Then stocks and bonds wavered, while traders held off from making big bets ahead of the Fed's final rate decision for this year.
I think my thought here is that, do I even give a fuck if it goes down at 2 p.m. for this one down here? I don't think that's going to matter. I still think the sell is up here. Somewhere up in here. It's way higher. It's like up here. Right in there.
Russell 2000 index hits a record high, last up 0.52%.
This is pretty bearish right here. Second series of high or lower highs here. We're gonna find out here really soon. We've got some data coming across right now, and we have more data at 2 p.m. I'm being pinned in for this this data at 1:30 and 2 to try to drop this. They're gonna try to drop this again down here. Still long. Thank you. This is becoming a larger correction. Do you see it? So you can see it right here. This is the correction right here. But this is now becoming a second wave over here. So this is 1, 2, 3. And there hasn't been any squeezing yet to stop that corrective move from becoming larger. Say 243. Just note too, there's a new 4-hour candle forming. We're gonna rip all the way down here.
KBW Bank Index turns negative, reversing gains of up to 1.4%. Man, you did have JP Morgan headlines earlier on in the day that led to declines in JP Morgan's as well.
So you can watch that there. No news yet on SPOOs. Should come soon. Don't trade 683.62 here. Should see this like roll down like this, then back up here and back down there.
French lawmakers approve welfare bill in win for government. So again, French lawmakers approve welfare bill in win for government.
10-year auction coming up in
That's the 2026 Social
15
Security
minutes.
budget.
16 minutes. be one more downstroke coming up here in a minute.
S&P 500 index turns negative.
In 2 seconds, I'm going to go potty really quickly. Back for 2 p.m.
Just keeping an eye on the French markets. France's CAC 40 index futures are down 0.9%. So just giving a summary of the reaction from the CAC 40 the futures. It did see a little wick towards the upside and went back down off the back of the headline of French lawmakers approve welfare bill in a win for government. Remember, that's just for the 2026 Social Security budget.
Close my call spread. Or closed his a little bit lower than me. Off the fucking fun ride. It's right here. Just to note that we have a 10-year note auction coming up at 2 p.m. The actual is 4.175. The previous was 4.074. 10 years looking bullish as all fuck right now. It's at 4.19 right now.
According to Bank of France publishing monthly business survey, they say France's economy is to grow 0.2% in the fourth quarter.
So in 10 minutes time now at 2:10 p.m. Eastern Time, RBNZ's Governor Bremen hosts an on-record media Q&A session. Ukraine's President Zelensky sees leader-level talks with the US next week.
We're not getting a 2-year right now or a 10-year right now, or no?
The euro trims losses after the French vote on the welfare bill. Zelensky says Ukraine is ready for an energy ceasefire if Russia agrees.
Oh, it was at 1 p.m. I thought that was the 12:30 one. We already did the 10-year.
In 5 minutes time now at 2:10 p.m. Eastern Time, RBNZ's Governor Bremen due to be hosting a media Q&A. Shortly expecting comments from RBNZ's Governor Bremen.
Watch out for Bremen sending us down right now. This is all still valid down here. Oh, hey, did I just lose the stream? Hey, cleaners over here working on the. I think I just lost the stream. Oh shit. Oh, I'm gonna check right now. Still here. Whew. I thought I lost you guys for a minute there.